Break the record, right? There was a humming expectation from day one that XRP would reach the historic $10,000 0 cents mark and that it would happen. And you know what? A turbo boost was recently given to that prediction. We are discussing the endorsement of this by none other than Larry Fink of BlackRock. Imagine this. He's not merely referring to a pitiful $10,000 0 cents per XRP. He's referring to it as a basic requirement. Oh no, this is the juicy part. Consider financial behemoths like Vanguard and BlackRock, who are now giving XRP considerable consideration for their cross-banded transactions. And wait, things will improve. Rumor has it that BlackRock will introduce an ETF that focuses on XRP. Yes, you've heard correctly. There's more though. Nor did Larry Fink stop there. The enormous $30 trillion 0 cents real estate market is what he is examining. You know, what is at the core of its future? Can you respond to that question regarding XRP? You don't want me to? I can't, but I do. Okay, thanks for giving me the wrap. The cryptocurrency market has seen a flurry of abnormalities in recent days, especially with regard to XRP. Imagine this. On the well-known exchange Crypto.com, XRP's value skyrocketed to an incredible $43,000 0 cents. This isn't an isolated incident, rather it's a part of a larger pattern of XRP's value unexpectedly rising. Do you recall last week's discussion of a $7,000 0 cents XRP malfunction at a major exchange? It's crypto conference turn now. Furthermore, it appears that these abrupt increases in XRP's value are happening frequently on several exchanges. Let's change our focus though and talk about something equally amazing that I discovered via extensive investigation and has nothing to do with BlackRock or the general XRP market increase. We're going to go into a discussion about Gary Gensler, the famous SEC chairman who took over for Jay Clayton. Gensler regularly classifies XRP as a security, as the majority of you may already be aware. This is when the interesting part begins. Robert M. Gensler, Gary Gensler's identical twin brother, is the same age as Gary and has a strikingly similar appearance. As the vice president of T. Rowe Price, Robert plays a significant role in the company. If you look a little closer, you'll see that T. Rowe Price isn't just any investment company. It's one of the biggest ones, making significant investments in Ethereum, Bitcoin, and yes, XRP. Thus, this connection is intriguing. His twin brother is actively involved in an investing firm that holds a sizable stake in XRP and other cryptocurrencies, despite Gary Gensler, the head of the SEC, still classifying XRP. It's intriguing contrast. That begs many questions regarding the complex processes at work in the realm of Bitcoin investments and laws. This leads us to an intriguing prospect. Could T. Rice's vice president, Robert Gensler, have unique knowledge regarding XRP's potential similar to that of Ethereum and Bitcoin? The firm's substantial investments in these three cryptocurrencies lend credence to this notion. Even while the SEC openly rejects the idea of insider trading, a number of studies and papers have indicated otherwise. These inquiries into insider trading and market manipulation have frequently brought to light dubious SEC practices. A pattern seems to be taking shape. It appears that SEC officials are informing their relatives about the digital assets that may soon no longer be classified as securities. These family members then make early investments, and when the asset is formally deemed non-security, its value soars, enabling these friends and family to profit handsomely from low purchases and high sales. Let's examine the likelihood that Robert N. Gensler might have had insider information about the SEC's possible defeat in a lawsuit against XRP from his brother, Gary Gensler. Sensible investors may want to buy in XRP at this time because of the possibility that Congress will press for a settlement between Ripple Labs and the SEC. Another dimension to this story is added by seeing how the price of TRO is gradually directing money into Bitcoin, Ethereum, and most especially XRP. The cryptocurrency community is ablaze with speculation that XRP may soar to $10,000, 0 cents, $20,000, 0 cents, or even $60,000, 0 cents. Notably, Jack the Rippler and other positive analysts forecast a sharp increase in XRP's value, possibly reaching $589, 0 cents. Despite being audacious, this prediction highlights the increasing interest and conjecture surrounding XRP and its potential in the cryptocurrency industry. Wall Street wants a share of the profitable XRP market, and based on my intuition, an XRP ETF will be the first significant move. Let's take a closer look at this trend, though, as Crypto Basic has some fascinating news. A former director of Ripple has taken notice of the analyst's suggestion that JP Morgan has made a big move into XRP. My eyebrows were definitely raised by this news, and we should discuss it more. This is how the narrative unfolds. An ex-Ripple director responded to Ben Armstrong, formerly of the BitBoy cryptocurrency brand, who resurfaced some contentious allegations regarding JP Morgan's purported involvement in XRP. This was disclosed in a series of posts by Armstrong, a prominent person in the crypto world. He claims that a substantial 7.5 million XRP coins have been purchased by JP Morgan. Armstrong continues by asserting that this action amounts to around 7.5% of JP Morgan's overall fortune. Hold on though, since this math appears completely incorrect with its current value of 4.46 million. 7.5 million XRP is not even near to 7.5% of JP Morgan's fortune, to put it in context. Armstrong's figure doesn't quite add up, given that JP Morgan's total assets as of their 2023 assessment are an astounding $3,890 billion, 0 cents. Armstrong nevertheless highlights the importance to JP Morgan's purported approach, implying that they are covertly hoarding XRP. He claims that this establishes JP Morgan as a rising force in the Bitcoin space. There is a story about Wall Street behemoths like JP Morgan possibly getting involved in the cryptocurrency space, particularly with XRP. Furthermore, even though the figures may be a little dubious, it's still worth considering that big financial institutions are getting involved in the cryptocurrency space. With XRP at the heart of some intriguing developments, it suggests a broader trend of traditional finance interacting with the digital currency industry. Armstrong's audacious remarks have also brought attention to asset management behemoth BlackRock. He's heating things up by saying that BlackRock is now considering XRP for its investment portfolio after his iShares Bitcoin ETF was approved. Armstrong continued after it. He's also giving his perspective on the ongoing legal battle between Ripple and the These financial ties and strong conviction in XRP's bright future is demonstrated by their aggressive investment in the cryptocurrency despite the continuing legal drama. Consider the possibility that this accumulation tendency is real. It would indicate that despite XRP's regulatory turbulence, major financial entities are placing bets on it. The truth is that Wall Street's adoption of cryptocurrency was always a possibility. I've been discussing this for more than 5 years, and at the time it seemed like a pipe dream. But now that Bitcoin is in the forefront, we believe XRP won't follow. I would have to politely disagree. The question is not if, but when. Armstrong's depiction of this particular situation, nevertheless, may not be the complete story. The plot thickens though. Former Ripple director Matt Hamilton responded to Armstrong's stunning accusations with a strong dose of skepticism, questioning the validity of such a transaction. Additionally, considering the large supply of XRP, he wondered what effect it would truly have on the cryptocurrency. Hamilton then pulls out a calculator. Considering that there are 100 billion XRP in circulation, 7.5 million XRP represents a meager 0.00075%. Hamilton even responded to Armstrong's assertions with a joke, "I'm guessing this is a parody account." It's a playful homage to Armstrong's frequently surreal style, implying that you would nearly need a satirical perspective to understand them. Now let's dissect the math, since, to be honest, it's very obvious. Hamilton was spot on with the numbers, highlighting the obvious errors in the initial assertion. The statistics simply don't add up, and that much is obvious. However, this made me wonder, where exactly did this bizarre tale start? I dug a little and found the treasure. Road people, I've located the source and it's amazing. There you have it then. It's critical to remain astute and perceptive in the intricate and frequently ambiguous field of crypto reporting. I'm here to give you the genuine scoop and assist you navigate these rough waters as usual. Please keep in mind that I do not hold a financial advisor license. These videos' content is solely intended for viewing enjoyment. Before making any financial decisions, I always advise viewers to do their own research and speak with experts. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. To be the first to know when I post new stuff, make sure you have enabled the alerts as well. I can't wait to see you again in the next video. Be careful.